Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what happened to the markets, what we can expect from the markets tomorrow and what happened to our trades. So as usual, the markets were very volatile today also. Nifty opened with a slight gap up, but immediately there was a huge selling and the market came down all the way to 17,000. And 17,000 has been a very strong support for the market multiple times, and it was also a strong resistance for the market when actually the market ended up correcting. So today also we witnessed market taking a very strong support at 17,000, and from there we saw a very strong bounce back and the market closed almost at the highest point of the day. It bounced back almost 230 points from the lowest point of the day, and the closing happened almost at the highest point of the day. So this is a very positive thing. Now if you look at Bank Nifty, the recovery was even more stronger. It recovered almost 600 to 700 points from the low. So it made a low of somewhere close to 35,000 and it made a high of somewhere close to 35,700. So given this, it is a very positive thing because we are seeing whenever there is selling, there is immediate buying happening and the market is going upside. So if you remember in the last week video, also we were expecting the market to consolidate within a range of 17,000 to 17,500 and Bank Nifty to consolidate in the range of 34,000 to 37,000. So we had a ratio spread in Bank Nifty and that has given us quite good profits as of now. So if it continues to remain the same way, then we are going to get further more decay in the upcoming days. So not just this, now if you look at the open interest, morning there was a very strong amount of call writing as the market started sliding, but immediately in the afternoon session we saw a lot of puts being written. So again, this is suggesting some sort of stability in the market. If not a trend, definitely the market is more or less stabilizing at the range of 17,000. So again, this also turns out to be a very positive news because we are recovering from the war. 2-3 weeks back, the fear was very high. VIX was over 30 and now we are slowly cooling down and trying to come below 20. So once we come below 20, that more or less suggests that things are settling down and it is a positive news for us as well. Now if you remember 1 month back when the fear was at its peak and Nifty was well below 16,000, when most of the people were bearish on the market, so we were expecting the markets to bottom out sooner or later. And from there on, the market has bounced almost around 1,500 points. And if that turns out to be the bottom, then it wouldn't be such a bad estimate because we ended up buying most of our equity shares down over there. So now we will quickly move on to the computer screen recording where I'll be showing you the open interest chart. We'll discuss what we can expect from the markets tomorrow, as well as I'll also talk more about what happened to our trade and what was the logic behind the trade. So today we ended up making an overall profit of close to 5 lakh. From intraday we ended up making around 2 lakh and from positional we ended up making around 3 lakh. So I'll show you the complete details in the video. And meanwhile, if you're liking the content on this channel, do not forget to like this video, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys. Hi everyone, welcome to the video. So today, as you can see, we made a total profit of around 5 lakh and out of this 2 lakh came from intraday and remaining 3 lakh came from positional. So I'm going to now explain what was the intraday trade, how exactly did we end up managing the positions, right? So when I open Nifty's chart today, since you know that right now we are currently trading in Nifty and I had also explained in the live trade what trades or what system are we using for Nifty. So today morning around 10 o'clock, we ended up taking a 17,100 short straddle. So right over here, that is 17,100 calls and 17,100 puts. So as soon as we took the trade was going quite well till around 11 o'clock when the stop loss on the PE leg got triggered. So this 17,100 PE stop loss got triggered. That means we are only left with 17,100 CE. So now we want the market to come down because if the market actually ends up going up, then we will be hitting double side stop loss. And hitting a double side stop loss is very bad because you are going to end with a maximum loss. Initially when the stop loss hit, our loss was close to 40k. Now it was slowly coming down. So first our stop loss got triggered for the morning trade, that is 17,100 PE at 11:30. So around this time we entered one more trade, and this was 17,150 short straddle. So now you might ask me, why exactly did I enter 17,150? So you can see where exactly is 17,150. It is somewhere right over here on the top. So let's try to simplify this. Since I have only a call leg and my put leg stop loss has been triggered, if the market shoots up, then I'm going to definitely lose money. So how to avoid that? I need to create a short straddle, or I need to either short a put or create a short straddle at a higher level. So now what happens if the market actually ends up coming higher? Then this 17,150 short straddle is going to give me a lot of profit. So this is going to give me quite a lot of profit, which is more or less going to nullify the loss from this CE leg. So this CE leg will be getting hit, but this particular short straddle will end up giving me profit. So next question is, what if the move continues on the downside? So then again we don't have a problem. The reason is you can see I have 17,100 CE short, I have 17,150 CE short against only 17,150 put leg. So I will definitely get hit from this particular leg of 17,150, but I am going to make profit from two legs on the CE side. This is where slight modification to your normal entry is going to make so much of a difference. So otherwise normally at 11:30 we had to take a 17,050 short straddle. So right over here we had to take 17,050. Instead of 17,050 I ended up taking 17,150. So in case if the market went down, I had 2 times the call leg compared to put leg, and that put leg also eventually would trigger the stop loss. So now the market did shoot up and I went to a loss. So I went to a loss because this particular CE leg, that is 17,100 CE, went to a loss, and 17,100 PE anyways had triggered the stop loss. So this particular C leg hit the stop loss, this particular P leg hit the stop loss, but my loss was reduced by a huge extent. If both the stop losses were triggered, technically my loss had to be somewhere around 1 lakh. But instead of 1 lakh, I only had a loss of around 40,000. Why is this? This is because we had done a 17,150 short straddle where the P premium was very high. So now I have a loss of 40,000. So I have to recover this loss, and for that I just want the market to go up. Why? Because as the market came from here till here, the CE side stop loss of 17,150, 17,150 CE also got triggered. So 17,150 stop loss got triggered, 17,100 CE stop loss got triggered, 17,100 PE stop loss got triggered. That means now I am only left with 17,150 put option. If the market continues to go up, then I am going to make a lot of profit. But if the market actually falls, then I am going to go to one more loss. So right now I am sitting at a 40,000 rupees loss. So along with this, I entered a 17,200 short straddle. Luckily for me, the market ended up consolidating around 17,200 even towards the end. So this helped us actually come from negative 40,000 to positive 1,90,000. So overall, we were able to recover around 2.3 lakh just because the market went up and the market consolidated around 17,200. So this was our major intraday trade. So this is how we actually ended up making a small twist to the normal short straddle. So technically at 11:30 we had to take 17,050 short straddle trade, but instead of that we ended up taking 17,150 short straddle. So now we'll also discuss more upon what to expect for tomorrow. So now let's discuss little more upon open interest, as I had told in the intro video. So you can see right over here 17,000 and 17,500. They have the highest open interest. So most likely the market will end up consolidating in this broader range. So we can expect any big up move or down move once these two ranges are actually taken out. So as long as it consolidates between this range, we usually don't expect any big up move or down move. And similarly, even in Bank Nifty, so you can see that towards the end we saw a lot of put writing around 35,000. So upside, you can see that there is a strong call writing at 36,000, 36,500 and 37,000. But my idea is, since Bank Nifty is very volatile, so we can expect 36,000 to be breached. So there are all possibilities that 36,000 will be breached, but I am definitely not expecting the market to cross 37,000 on the higher side. So the specific reason to this is that 36,800 is a very strong resistance even on basis of technicals. On the lower side, I am not expecting the markets to break 35,000, but that can always be a possibility. So just to stay a little more conservative, for Bank Nifty, I am expecting a range of 34,000 to 37,000 for this particular expiry. So this is the same range which I had suggested earlier as well. So on Thursday when we actually put out a video. So I'm still now sticking to the same range. So this is what I'm expecting from Bank Nifty. So let's see how exactly the market ends up moving. So I will just share you the trades what I have in terms of positional trade. So this is the trade what we hold. So the thing is, we are long on 34,500 puts and 36,500 calls, 20 lots, and we have gone 500 points away and we have shorted 34,000 puts and 37,000 calls. So the thing here is, you can see if the market ends up consolidating below 36,500 and above 34,500, then we are still yet to make just around 8,000. Initially when we started this trade, we were bound to make somewhere around 1.5 lakh, and now we have made more or less the complete amount and we are just left with 8,000. In case if the market actually ends up going up higher or coming down above 36,500 or below 34,500, so then we are bound to make some gain. So I'll just leave this trade as it is. In case if the market trends on the higher side, we are actually going to benefit, because you can see our break even on the top comes at 37,400, somewhere around 37,400. We still have a lot of room for that. So that's the reason I'll just leave this trade as it is. In case if we end up going up higher, then we are bound to gain. So this is the trade idea what we have, and also I discussed what was the exact intraday trade we took and the market outlook for tomorrow as well. Today we also witnessed some stock specific moves in PVR and Inox because they were getting merged, and also I personally believe some FMCG stocks are really cheap, so they are at a very attractive level. I would definitely be happy to invest in some FMCG stocks right now. So with this, we also come to the end of this video, and if you have liked the content, then don't forget to hit the like button, share this video as well as subscribe to Optionables. Thank you so much for joining, guys.